Hi everyone, my name is Anne-Marie Band. Today is Monday, March the 31st, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are sitting at a very important spot. We are looking at the daily E-mini S&Ps. We had this very big range that was, several hundred points wide. We've broken down through it, rejected the 200 on the daily, rejected the 50 a couple of weeks back, and commodity technical traders, which are big trend following traders, they have been short and continue to be short. If we use a measured move for this range, we anticipate that where we're headed at, I don't know how long that's going to take, but it looks like we're headed to 54.03. We'll draw more boxes if we need to, but right now we're going to sit in a pretty choppy zone where we sit between 5590 in the E-mini S&P, 5590 to potentially 5500. So it's about 90 points of a move. Let me take a look at my platform here to see what the traders are thinking the measured move might be for today. I'm going to do that by adding the size of the bid-ask frameworks on our options chains, and it looks like 62 points they've added into the move. So from this area right here, it looks like there's about 60 points on either side of this that options traders are pricing in for a potential move today. So it's not a huge move, but certainly bigger than we've seen in times past. Let's go to the hourly formations. We'll show you something else. Notice, see all the congestion we had up here? All the lines, all the opening ranges. It told us that we were sitting in a region that was battling for some sort of equilibrium, right? And we left it on Friday. This low on the opening range on March 20th at the loss of 57.06. Not Friday, excuse me, March 28th. Is that Friday? Yeah, that was Friday. And we had a very big move down over 100 points. And so now we're staring down the same sort of formation with all of this to the left as potential support. If the traders that have positioned with these gamma flow lines get nervous and it begins to accelerate below this 5560-ish area, we could have ourselves another cascade, right? And that cascade runs to 5509 and then 5403. Now, could that happen today? Yes, it could. Could we sit here and congest? Yes, it could. But we've broken through the low of the Globex, and so bounces, because we are under the VWAP, under the 5, and with quite a bit of negative momentum. Bounces are going to be sell zones today. We could have ourselves quite a volatile day. I mean, very volatile. If we look for tomorrow's date in what it is that these traders are framing out, they're looking at 90 points potentially between the opening test of where we are right now and what the reflexive move might look like. So a lot of money being priced into expanding moves in the morning, but this area that we sit in right now is going to be very noisy because the traders are going to try to position and hold the line so that we get up above this 55.65 to 55.68 level. Shorting the lows here don't look great simply because of that, so you want to wait for the bounces. The ideal bounce would be right at around 55.80. You could put the stop halfway between the range, but that gets a little sticky. I would say give yourself just 3 or 4 points. If it begins to accelerate to the north, it could get to the top of the box and fill the gap, which sits here in this low volume node at right around 5,600. Let's get to the NQ. Let's go to the daily first. We can see the same sort of thing. Everybody in this range, high volume areas. As we look at the daily chart, we can see these very high volume areas. Traders positioning, looking for the reflexive bounce above. They did not get it. Sellers came in more aggressively. So the box we want to stare down is this range right here. And so if we duplicate it in a measured move, the anticipation is that where we're headed to is this area of liquidity at 18,651. So could we find ourselves some resistance and support sitting around that area? Yes, there's something around 18,800, 18,850, and then below that, we have these edges, right? So clearly out of the congestion box into a new congestion box of times past. If we measure the move from that wave, it tells us the 50% area is right where we sit right now, which is why I think this region is going to be so jumpy. It could be very rangy. We could have very big wicks. We are sitting under the average volume for this space. And, you know, anything can happen. We want to be very careful. If we use our measured formations, we can see we left this opening range in the second hour of trading for the breakdown. It's continually led lower. We are bouncing off of 19,130-ish. That's a space that we can see on a daily chart that's registered by the green lines. The yellow lines are the opening ranges, and you can see that there are very few of them around us because we've left the big pocket of congestion, right? We are well below the 50, well below the 200. This is a very bearish formation, but right now we sit in a pretty solid pocket, which tells us that we could range here for a bit before we break. Below 19,139, it's likely that we head to 19,050, and then this 19,880 area is pretty much another noisy patch that we should head down to. If per happenstance the buyers come in here and they begin to hold this range, we've got to let price stability show up. And what does that mean? It means we've got to stop making lower lows, and we have to break the low of the opening Globex candlestick, which is the first hour of pre-market trading at 6 p.m. Eastern. Upwards, we could fill the gap and get back into 19,003. Well, they closed the gap, didn't they, with that break and the move up. We could get to 19,380. Things are very negative. Let's see what the NQ from the options chain is telling us. I'll use tomorrow's expiry on the daily chart. And whoa, almost 400 points of a move is being priced in at the current region. So very choppy, but again, there are a lot of people trying to defend this floor. If you want to take along there, momentum shows if trend is down and you're under the VWAP and your momentum is to the upside, you do have a bounce reflexive motion potentially into the VWAP, but that is something you want to keep your eyes on, and it's an in and out kind of trade because we are very much against the trend. Let's go to the YM. Same sort of thing, but let's go to the daily so that you can see it. Big sideways formation. All the traders positioning in here, trying to get long to recapture the 50. Couldn't happen. Ton of shorting action out of the range. So we've got ourselves this box that sits a little bit wider. Let me make sure that I can get it properly. That's round and about the formation. So we're going to clone it and move it to the downside. So the measured move takes us 38,000 and a bit below that. Let's get the line here. Here's the wick, right? 38,500, rounding about that region. Could be 38,600, right? Somewhere around here, traders are going to likely respond. But above that, we have a line at this 40,000. And we've been talking about this line for a while. So 40,000, potentially where it's going to head to. We have, I mean, what do we have? We've got this break. If we do Fibonacci here, oops, wrong direction. Right. We put a Fibonacci here at this low, and we measure this move. 50%, bottom of the range looks like 40,000. 50% is way above us. That's at 43,000. So we've lost that zone, right? That's that 50% area. And walking down the formations, it's 40,000. And then confluence here at 38,500, 38,600. That's what we're staring down in a bigger framework. We could easily turn around and bounce. It's a very important day that we are sitting on. My thought is that our bounces could be fairly sizable, but they should lead to more selling. So here is a very high volume node at around 41,864. That could be a problem. It could be a target. And here we are back inside of the opening range candlestick. Does that mean we move up and then back down? We've got negative trend. We're sitting under the VWAP. That means everybody that is long is underwater. Everybody in general, on average, everybody that is short is in the green. So we're just going to have to see what these traders do here. If we lose 41,651 again, there's 41,443, and then a 400-point move to the south once more. If we hold it, we're back up to 41,680, and then potentially this heavy congestion zone that's quite a bit wider than the opening range candlestick. It clearly tells us sellers are sitting here round about 41,714. We've got a low volume node with a collapse of price in the last hour of trading on Friday. And so that bounce could fill in this gap, right? We could go either way because of the gamma lines sitting there. But this is going to be a noisy patch right in here. If we close an hourly candlestick under the low of the opening Globex candle, it's very likely downside. We have to breach 41,400, pull back, and close a candle above the opening range high of that Globex candlestick formation at 41,680. Let's take a look at Bitcoin. A bunch of folks laughed at me, told me when I said, hey, this thing could come back to 70. They were like, no. But indeed, there's even more liquidity piling up here. Here's the difference. Notice this is a trading range, right? It just lost that level several days back. If we clone it, it came close to the bottom. It's bouncing in between the 200 and the 50. My thought is that bounces are still sell zones here. We have potentially a flag pattern that could break in the direction of trend. So there's still a lot of upside pressure here. My thought is that as liquidity dries up, we'll be back down here in the 70s. So bounces are sell zones, and they started their first selling motion a couple of days ago, actually Friday, at that 87,000, lost the region, and now we'll see if it can come down into 76 or it breaches 87,500. Above there, it's a long to 90 and then to 95. Yeah, That's where all that congestion is. Point of control sits at 97,000 in this current formation, but this looks like a mean reversion trade. Notice, here's the 200, far away. It just starts drifting into this edge. Easily, I see us testing the bottom of the box, but it's not as simple as that because the buying pressure could really expand, another $10,000, right? $12,000. I'm going to skip over no, I know some of us do trade this. Let's go here. We can see the opening range on the 1 hour. The low end, 81,690. If we lose it and end back up inside of the box, we can usually trade to the top of the box being the rectangle of price in between the high of the Globex open and the low of the Globex open. Here we are sitting at the top of the range. Could it break out? Potentially. We've got a very thin low volume node at 83 and a high volume node at 83,900. So that certainly is it. We see the downward spaces. I've got those marked for us. Below 81,690, we've got 81,140, and then 80,135. As you can see, if you're looking at your charts and listening to this simultaneously, we are in this bounce zone that I mentioned we could easily see because of that very important gamma line. Okay, let's take a look at oil. Now, we've heard there's a lot of weekend rhetoric. It certainly shows it in gold, but in oil, we're still here. We're still in this range, right? And to me, I would expect to see Brent crude, the spread between Brent crude and the WTI start to widen. Here's the range. Took us to the top of the box, broke out a little bit, but then certainly came back came right back in. And this box we could have drawn to right here, but we expanded it over to show we're still sitting in the same place. Under the 50, we just kissed it. It's been a selling formation in times past. It looks like a selling formation here, even though the noise and rhetoric feels like it might be bullish for this one. So watch the lows here at 68 to see what we've got going on. But as you can see, here we are sitting in front of all of these opening ranges. It is very sideways. So focus on the box, right? And so you can look at the box in two different spaces. You can look at the box as it sits in this area, or you can do the entire zone and realize, we're sitting right at the point of control, right? That's where most of the price action has been trading. And so we really want to watch to see if it holds this line at $69.45 or it breaks again $69.72. That will be important for upside reflexivity. That is very noisy. I don't like to trade this chart because of the leverage. I don't like to trade it unless it's sitting at the bottom of a range or it's at the top of a range. So that's pretty much a no-go for me there. Gold contract, we are in that forward contract, and you can see, wow, this thing is just running off the rails. Where's the next spot? We've drawn the Fibonacci here, and that is, let me move this here. All right, so we got a really big wave on the upswing. And so I'm going to take this area, and we can see we're well past 3128. Big number, right? Friday's high, somewhere around 3125. I'm just going to leave it right there. Very big range expansion. The next line in the sand is 3240 to 3250. Pretty big, right? So this, to me, this really does look like geopolitical tension. But what's feeding the underneath are the fiat currency central banks that have continued to buy gold. right? So here's the opening range. We are very far away from it. Let me duplicate this. Here's the opening range, 31.2830. That's the last support. Value area high is 31.39. That's also the key area that we are staring down as relative support. We've got a rolling over of momentum. When moving averages are up and we have a rolling over of momentum, we expect pullbacks into the range that allow more buying pressure on the horizon. We're on the outside of the volatility bands. We just tested those and now we're coming up. Could have another rise to the upside before the price action rotates. If we're interested in a Fibonacci moving from high to low of the last range, it gives us $3,171 as our next target with, isn't that interesting, the Fibonacci here at the 2.5 measures 3,160, and that's just about where we stopped in the charts. Okay, let's go to SPY. Right, let's go to the daily. Here we are, broke the range, broke the 50, lots of selling, broke the 200. Buyers really trying to recapture the 200. Sellers took over. So my suspicion is that we are going to have that measured move. Something else that's showing a fair bit of concern is the breadth and the number of instruments that are now sitting underneath their 200 simple moving average. That's usually quite bearish as that number gets higher. So where is the target zone? 540 and then 507, 5 to 16, 507, 516. So looks pretty bearish, but if the traders recover this 556 zone, value area low, we could turn right around and move up, folks. This is a very tenuous place. I would be trading very short term, 30-minute, 15-minute cycles from support to resistance and walking the floor back up. From the 1 hour perspective, you can see we've left all this noise. And now we're sitting down here, bottom of the box, opening range, candlestick formations, right? We breached them and then fallen right back out. Let me find I'm just going to borrow this one. Add them back as we need them. Now let me borrow that one. Right? So we need to get above 551 and ultimately above 552 for us to feel any kind of solid reflexive motion to the upside. Right now, every bounce is still a sell zone. So as long as we stay under 552, bounces are going to be shorts there in the SPY. Same sort of thing happening in the Qs. Right? This was the first area. Let's take a look at these boxes. They really are a very simple way to take a look at big price action and realize that measured moves are a thing because, as I mentioned 1,000 times over, traders are simpletons. We like to look for support that holds and we try to buy it. We like to look for resistance that fades and then we sell it, right? It's just, that's what we're looking for. From the downside perspective in the Qs, we've got 451. We need to get up above 470, 469. But 451 looks like the next spot. We've got liquidity lines at 448 and then another congested zone at 431. If we get to the 1 hour, you can see what a lot of noise, right? Here's a channel that we broke out of on Friday, and we are in continuation, right? So to me, bounces, any kind of bounce, particularly, it might not be very strong at all, but any kind of bounce is going to give us a sell zone. So after today, what I'm going to do is clear out all of these lines, because we're starting a new range, and we're going to go with some boxes that clean us out, because me, a highly anal retentive individual, this is starting to drive me crazy. But we have played out the form that, listen, if it's choppy like this, we got sideways action. You got to wait for that reflexive bounce before you short in the direction of trend. Now, we've just got tiny bounces that are just giving up the ship. Okay, so two things I want to add to our look. We're going to look at, if we just want to go long, we're going to look at the SPXU, that is the inverse of the SPY. And that has been, I bought this at 20, so pretty happy about that. I wasn't for a while, way down here, but I am now. And so here is what's going on. This is going into resistance, but look at how big this pocket is, right? Plus, this is a leveraged ETF, so it is going to have some reflexive motion. I would not buy this unless you're doing quick snap trades, or you are buying it and selling calls against it, right? That should be the better thing. So what's the low here today? Opening range candlestick, 26.48. There we go. So as long as we hold 26.48, pullbacks are going to be buy zones, looking for 27.48 or $1 of motion, potentially today. Now remember, this is an inverse ETF, and so it tells us that if the markets go down, this is going to go up. Here's another one. I think this is the SQQ, yeah, right? This one is right at the top of the range. It's at 40. Sorry about that. This is at 40, and this is a pretty important space. I'd like to see it pull back so that the buy zones are there for us, but this is a tremendous amount of upside pressure showing here in the short ones, with the target up here at 45. All right? Okay, folks, that's it for me. I'll see you on the streams.